I want to talk about something I mentioned on the hedge fund call on Thursday night. The idea of finding stocks that are ready to bounce using bullish. Well, you know what? I'm going to change this to bullish or bearish hammer patterns. I do see some nice bullish ones, bullish or bearish hammer patterns. These are candlestick patterns, and it's just one of the many candlestick patterns. I'm not going to get into a candlestick, go through all the candlesticks, because that would take us a week. These are the three I'm interested in. The hammer candlestick pattern. Here's the green hammer. Here's the inverted. I'm sorry. This is the green hammer. That's the red hammer. And then we have the inverted hammer. Okay, so these are usually, they can be reversal signals. And what you want to do is look for these hammers at the end of a trend for a possible reversal. All right, so a green hammer, if this happened at support and preferably on some volume, normally what would happen is there's some kind of follow through. Even if it's red, the difference between this one and this one is on the green one, the stock opened here and closed higher than the open. Here, the stock actually opened here and closed lower than the open. If you're looking for a bullish reversal, the green hammer is better than the red, but both in my experience are good as well. And then you have the upside down ones. If you see this pattern at resistance or at a market top or a stock top on the stock chart, then coupled with some extra analysis oftentimes leads to the direction indicated from the bottom to the top of the hammer, or the top to the bottom of the hammer, follow through in that direction. Like a slingshot, imagine the green hammer, you have a slingshot, the bulls and the bears fight through the day, they drive it all the way down here, they stretch the slingshot back, and then at the end of the day, the bulls take over and bring it all back up to the top. And like a slingshot, there's some momentum that can often happen the following day. So that slingshot movement continues following on the following day, or maybe a few days later. Okay, so here's some examples of the SPY chart. And one I was talking about on Friday was this one here. Now there wasn't a whole lot of volume, it's slightly above average volume. And what I said on Thursday was I'd be surprised if this market dropped, and it did on the next day because of support, because of the two bounces off the 50-day support. We talked about using confirmations, which would be in this case, and Jeff brought this up, and it's a very good point. The best thing you can do on these is wait for a confirmation day. So wait for the stock the next day to breach the high of the hammer, and that's indication that follow through is going to happen. So I've got some highlighted on the screen here, and you can see what's happened since the stock. So this was a bearish hammer, the stock reversed and then ultimately dropped. And that I think is going to happen here as well. It doesn't have to happen the next day, but again, wait for follow through. If you start seeing the SPYs crack above that point there, like they did here, that could very well result in further upside like it did here. So not all of these work. This one, it took a week or so before the bullishness happened. But when we scan through these, you can find that when you see them at market tops and bottoms, or not necessarily tops, but turning points, oftentimes they lead to movement in that same direction. So that is the deal, and it's not foolproof. So you got to confirm these things with volume spikes, support, resistance, and moving averages, trend lines. So when you go into Tom's tools, I'll show you. I'll actually do this in a minute. When you get into Tom's tools under the candlesticks Doji's ranker, and I'll do this in a minute, and notice there's a boatload of different types of bullish and bearish patterns, reversal patterns, lots of them, gaps. It's a whole nother directional discipline that many people like. Steve Nissan, the candlestick guru, he's got books out you can read, and it's a nice system. Doesn't always work, but works great. Works except when it doesn't. So that's why the confirmations are so important. So to find hammers, which is what we're doing, when you get into the ranker, the first thing you want to do is set your stock list. I like penny plus weekly. You could use all optionables if you're versed in handling slippage. But penny plus is a nice entry level list. It's got tight stocks with tight slippage and stocks with weekly options, meaning they expire once a week or even more than once a week on some of the ETFs. So those are all in there. Select hammer patterns, and then you hit search, and you see this slide every week. Again, with any directional system, you could go straight calls and puts. You could do debit spreads, vertical spreads. In the event you want to hedge IV or reduce the entry cost for a single contract, you could put on a spread. We like credit spreads. I like credit spreads. I like to do these, and the advanced strategies like butterflies and calendars and much more. So those are the strategies. Let's go into the scanner. I'm going to go right here and zoom in a little bit, get my zoom back, and let's use the scanner. Where is it? You go to stocks, stock rankers, candlestick dojis. We also have candlestick stars. I'm going to click candlestick dojis. If you don't know what a doji is, you can click the help. Check this out. This is like a book. You click help, and all that you want to know about candlestick patterns are here. So this is, it's even got the math if you're so inclined to determine the math, as well as how to use the scanner, how to use the results, trade implications, possible trades. So I wouldn't even go out and get a book just now. I would just go right into the help file for each of the candlestick scanners and scan away and read away. Okay, so I'm going to select hammer patterns right here. Penny plus weekly, just like I demonstrated in the slides. I click search. And I've made a mistake. I've got Home Depot selected. That was what I did on the credits. I want to select stock list, penny plus weekly stock list. Let's hit search now, and we can go through some of these. Check out the ability of this scanner. What I'm doing here, you got the stock symbol, go to a stock chart, get a quick pick, type of pattern. So this is a green hammer. Let's take a look. I'm going to hit the pick here, and there's your green hammer. It found it. The question is that enough for you to want to go bullish? Well, maybe. What am I going to look for? I want to see support holding. It did. Look here. This is the 50-day average. The stock danced below the 50-day and then slingshotted up above. Green hammer closed higher than the open and above the 50-day average. So that, to me, if it's coupled with volume, let's go to RTX and see what it's doing today. Okay, so there's the same live pattern. The volume wasn't above average. I don't really get too excited on these unless the volume is above average, and it's not in this case. It's interesting, though. We've got strong support at 98. From here, I'd need some other reason to get in. I want some more technicals to support me. I don't have volume. 98 held here as support, so that's interesting. Maybe I'd sell a credit spread at 98 or 96, maybe, but I don't love it. You're not going to love all of them. Nutrien, it's a red hammer. All right, same type of deal. I don't mind red hammers. It's still a bullish pattern. And so then I'm looking at, let's go to a live chart on NTR. And this was the bar on Friday. And notice it was less than average. Right at the 50-day average, closed beneath it. No, I don't love that one either. One I do kind of like, though. Which one was it? I do like Raytheon, but here's one I really like. Check out the pick on Monster Beverage. Look at this. We've got 100, round number. Increments of 100 are typically strong support resistance levels, and that's the case here support, 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 support. Yes, Friday's action right at support. Where do you think this stock's going in the next 4 days into earnings? Where do you think? Well, I think maybe it's going to rise. MNSTR. Let's look at a MNST. That's it. So we got a nice support level at 100 now. And it's been super strong support for quite a while. Now you might be inclined maybe to sell a put credit spread underneath, maybe, but earnings is in 4 days or 3 days now. Earnings is on 2/28, which is tomorrow. All right. So what do we do with a stock that's about to have earnings tomorrow? Probably not much. Probably not much. If you were to scan for this on Friday, what you could, let's check Whirlpool as well. I didn't look at that one. Yeah, that's a green upside inverted hammer, Whirlpool, WHR. Yeah, you know, sometimes when you see an inverted hammer on above average volume, you might see a follow through to the downside afterwards. In this case, 142 is holding, earnings is behind us. This could be a nice little bearish credit spread. Now, we're gonna maybe not. I was thinking about doing a trade on one of these. I did like the monster one, but earnings is tomorrow, so it doesn't make a lot of sense to do anything with it. So unfortunately, now one thing you can do with any scan result is to save the scan results into my stock list. I'll click replace, and now the 8 candlestick patterns are now saved in my stock list. And from there, you could go into any searcher that we have here in Tom's Tools. We can go down to calls and puts, which is what I had originally planned to do. Select my stock list. Where is it? There it is. And I could look for calls and puts. So I'll sort lowest percent to double on the calls, search, and there's 32 trades. So Raytheon RTX is on top of the list. Why? Well, this call option, the April 21 100 strike call, will double your money if the stock rises 6.36%. So call percent to double is only a 6% rise. What does that mean? If the stock rises 6%, this call option will double your money. That is awesome. That's the fastest doubler on the screen. I'll click the call price here, and let's see if we might even think about doing this one. I don't have enough of a bullish signal. Let's take a look at Raytheon one more time. I mean, what I do like about it is the stock is above the 50-day average. The hammer pattern verified that that's a strong support level. Today we bounced off it a bit, but I don't have any reason other than that to think the stock is going to rise from here. And if I don't have that, I don't take the trade. So I'm just not seeing much on the list for today on these on this response here. I could try bears as well. And by the way, some of these patterns are bullish and some are bearish. So let's let me show you monster. I really like this one except for earnings. I think this thing's going to rise. On Friday, I would have done it because earnings on Friday was 4 days away. Now it's tomorrow, 1 day away. So there's no time, but this would have been a nice little bullish opportunity for us if we had more time before earnings. So that was the monster one I liked. Let's try puts, which I haven't practiced yet. See if there's any good looking puts on this bad boy. Raytheon is also on the board for puts. Accenture. Let's look at the Accenture chart. ACN is Accenture. I'm looking at that pattern. That's that's like if that happens at support, which it did at 265. See, there's a support level. There was a bounce. Let's take a look. ACN Accenture is the symbol. I didn't see any volume. I didn't see volume on Friday. Stock's definitely in a bearish trend. It did bounce today as a follow through along with the rest of the market, but I don't take it.